All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. It's time to do our analysis, and we've got to do this rather quickly because we do have ADP today. So let's start off with the euro dollar. So I want to point out, and I know I did a little bit earlier, but you guys are, obviously there's some people that are tuning in just now. The euro dollar is challenging resistance right now. Okay, now let's backtrack a little bit and just review everything we've had here. I'm gonna leave that for a second. All right, I got out of my euro dollar long yesterday. I was buying it here at 111.70. I think is where my cost average was since like last Wednesday. I sold it yesterday when we got to 12.86 or 88 or something. I exited it right here. I knew we were approaching this trend line. I really wasn't sure we'd make it all the way up here today at that point yesterday, but with the dollar as weak as it was, and holding on to, and the euro holding onto its gains, it made sense that we're up here today. Now we are challenging resistance. The key to the continuation of the euro dollar is all about ADP today and payrolls on Friday. All right, I think the risk is the euro breaks higher, and the reason why I say that is because, like I said, tomorrow, last month we had a really strong jobs number. I think we created like 240,000 jobs. That was much better than the market expected. It might have been an anomaly, and we might revert back to the mean for February. And in February, we're looking for 200,000 jobs, or, actually, let's see, on Friday, we are looking for 206,000 jobs. If it comes anything, less than that, if you're talking like 180, 160, that's gonna give the euro the green light to really break through these highs. All right, it has been a 38% retracement, very shallow retracement following the ECB. The FOMC, 38% retracement, which sets the stage for a move up towards 116. Are we going there today? Probably not. Can we start the breakout today? That's possible. If the ADP number comes in weak, all right, now the ADP is looking for 193,000, I think is what the expectations are today. 195, sorry. We're looking for 195,000 jobs. If we come in anything shy of that, that could indeed create the breakout that the euro is looking for. All right, I believe that key resistance today now, and let's go back to this daily chart really quick. So if you take this trend line from the highs that we had in October to the highs that we had in February, the highs we had in March to today, we are knocking our head right up against resistance right now. Okay, that means that if we can clear and hold the highs from here earlier this month, that would be 113.36, 113.42 right here is the spike high. Let's see here. I don't have my magnet on. It drives me crazy sometimes when I'm, damn it. Hold on really quick. All right. Okay, there we go. All right, so 113.42. I mean, we're basically right there. I'm gonna write down resistance at 113.50. If we can clear this, that's gonna set the stage for obviously a move a lot higher. The euro looks extremely strong. The dollar looks very weak. It looks entirely possible that we do break higher. All right, we are still in a range. Just, keep that in mind. Keep that in mind. I know it's like, I write down range, but we've actually been on a pretty bullish move for the last couple of weeks. But I've had range for a long time. I mean, the euro looked really bullish here. Going back, last month. I mean, in February, the euro looked extremely bullish. We were still in a range, and we got swatted down. You know what I mean? Now, the reason why right now is a little bit different is because obviously Janet Yellen's speech yesterday. I mean, that could have been a Humphrey Hawkins testimony. That was extremely dovish. All right. And she really set the stage for a weaker dollar. I mean, you know, expectations have been pushed out dramatically for, you know, rate hikes. You know, a lot of traders aren't even looking for a hike until later into the year now. And so those expectations have really, you know, are going to put a pretty negative effect on the dollar, obviously. So like I said, the stage is set for a weaker dollar, especially with the euro. Now you might go, well, is that going to, you know, is that going to hold true against the Aussie or the Kiwi or the Canadian or the, you know, a lot of that has to do, in my opinion, has to do with risk appetite. You know, I don't know if the market's going to like a weak ADP number. Like, you know, if we have a weak jobs number, I'm not sure if the stock market's going to like that. I mean, the stock market will like the fact that, you know, that oh wow, the euro is trying to make a move right now. We're just pushing right into highs. Look at the euro stabbing into new highs. I mean, we're really trying to make the move here, and like I said, I'm not sure if we're gonna, you know, if you know, the stock market's gonna like it. If the stock market doesn't like it, the euro and the cable and you know perhaps the you know the Swissy, they might be on their own program. You know what I mean? They might move differently than some of these commodity currencies, which is great because they'll set up for a lot of moves like what one I'm really interested in right now is the Euro Canadian. But the Euro Canadian, I mean, this thing's about ready to bust a move higher. I love it. That means that the euro is going up, and at the same time, the dollar Canadian's moving higher. Or the dollar Canadian might not be moving lower; it might just hold around 130, and the dollar and the euro dollar's, you know, staging a massive rally. You know, these are all things that, you know, I look at when I'm looking at cross rates and how it's going to affect, you know, some of the other majors. Anyway, you know, I think this is a great setup. I'm not long, I'm not short. I'm looking to get long, but you know, it's something that obviously we're paying pretty close attention to. All right, now support for today. Obviously. You go back to the euro dollar. I mean, let's say it's a strong number. You know, how far is it even possible for the euro to pull back at this point? I mean, we're obviously very overbought. You look at the 4-hour chart, it's overbought. We can be more overbought. That's one thing that when you look at overbought and oversold conditions, the one thing I can guarantee, and I can't guarantee much, when things are overbought, they can become more overbought. When they are oversold, they can become more oversold. All right. So don't think for a moment that they can't. All right. And if you ever question that, you ever say, oh, it's so overbought, there's no way it can go higher, go look at the dollar yen from the move from 82 yen to 105 yen, and then go tell me how many times it was overbought. Okay. And that's the most recent history of overboughtness that I can think of that has just blown the doors off of any expectations, right? So yeah, like I said, if you ever think something's overbought, just go take a look at the dollar yen. It was overbought at 85, it was overbought at 87, it was overbought at 88, it was overbought at 90, it was overbought at 92, it was overbought at, yeah, and it rallied all the way to 105 and shoved that trade up so many traders' faces. I mean, so anyway, so the euro, challenging really key resistance. So where's support? We got to figure out where support is, because let's say you're long the euro dollar. You know, you're long the euro. Where do you go? Okay, I'm wrong. You know, and that's where I've got to think. Okay, and I'm not trading the euro right now. I'm not. But I've got to think. Okay, well, at what point, if I was long, am I going to say, all right, I don't want to be long anymore? You can see this was an hourly wedge, right? I mean, my 2 cents is, you know, a move below these hourly supports here, which comes in at 112.80. We move below that, 112.83, 112.82. That's where anybody who's long right now, who might be a little late, that's probably where they're going to say, all right, I'm done, I'm out. Okay, so 112.8. It's not great support, but I think it's, you know, it's probably where traders are looking that, you know, they might be wrong. All right, let's look at the cable. So the cable, I sold this one too yesterday. I had, or was it yesterday that I sold it? I can't remember exactly where I sold it, but I sold it when we hit this. I guess it was yesterday, because we hit that previous support, current resistance. I took profits off the table. It was wonderful. I was so excited yesterday. I mean, I had a great trade in the euro, and I had a great trade in the pound, and I gave back all those profits yesterday. Such a numbnut. Anyway, it was a really great trade, really great trade in the cable. Obviously, it's still moving higher, and you know, we are coming up towards the, you know, could be viewed as the neckline of the inverted head and shoulder pattern. Now, what does that mean? Well, that means that this resistance right here is probably just as important to the euro dollar at 113.50. You know, the cable right here at let's just call it 144.80, probably just equally as important. Okay, I'm going to check one thing really quick before I leave you with that. 786, 88% retracement. These 88% retracements have been pushed a lot recently. That comes in at yeah, 144.60. My trend line's probably not perfect by any stretch of the means. Yeah, by the time we get there, I'm going to write down 144.60-ish, okay, is key resistance for the cable, because if this is an inverted head and shoulder pattern, it may be a complex inverted head and shoulder pattern, okay? All right, so here, let me remove that. So, you know, with a little, you know, a slanted neckline, okay, and that means that this resistance is going to be pretty key. Now, one of the things that I'm thinking, because first of all, I'm going to ask you guys right now, how many of you guys are bullish the cable right now? And don't tell me because, you know, you're long. How many of you are bullish the cable right now because you're like, fundamentally it seems like the bullish call is the right call? I mean, fundamentally. Actually, that's the question I should probably be asking you. How many people think fundamentally you should be bullish the cable right now? I could probably say nobody. Nobody. Fundamentally, no flipping way, right? But think about all the traders that were short. Remember this week? Remember, and I joked about that one dude that's like one forex signal or whatever his handle was. He's like, you know, why are you getting long the pound down here at 141? Fundamentally, it doesn't make any sense. I'm like, well, you know, that's because no one thinks it's the right trade. So how many people are short the cable right now? The thing's rallied literally 100, 300 pips in their face. And how many people are saying at this point in time, there's no freaking way this thing's going to break out? I mean, listen, fundamentally, I could probably argue that the pound is not the right trade to be long. But I think positioning, you know, there's probably a lot of people are fading into the strength, which sets up for a really big move to the upside should the cable break out. So if the euro breaks out about above 113.50, the pound's probably going to rip higher too. You know what I'm saying? So, you know, I'm looking at the cable as, you know, I don't know if I'm going to play the pound dollar. Just so you guys know, I rebought the pound New Zealand about 40 pips ago this morning because I realized it was by the 618 retracement. It saved me a few $100 last night, getting stopped out and then rebuying it this morning. But, you know, I don't mind playing the pound on the long side. You know, if I'm not comfortable doing it here, I can do it against some of the cross rates. But, you know, look, if the cable starts to break, it could be a nasty breakout. Okay. Now, you know, you got to think about, how about if the dollar does strengthen though? You know, we have a strong number. All right, where's support? Support is going to be right here. This is where anybody who's buying it, you know, post Janet Yellen overnight, you know, this is where they go, okay, well, I was wrong. You know, 143.65, right? It's not great support, but it's probably where stops are situated below. All right, let's go ahead and take a look at the Swissy. Gosh, I gotta really move. I keep just chit-chatting about stuff. All right, so here's the Swissy. I got asked yesterday, hey Blake, are you looking to buy the Swissy yet? No. My answer was no. Now, is the Swissy coming into the place that I'd like to be on the long side? Yeah, it is. Okay, it is. Now, here's the thing. We can't measure this number. Your number and my number is completely different. So I can't measure the fibs from there. Only fib I can measure from is down here. The 618 comes in at 95.50. We get to 95.50, I am a buyer, even today. Okay. That will put the euro dollar probably up at 114, but you know, even if I don't want to buy the Swissy, I might buy the Euro Swiss. I sold my pound Swiss, just so you guys know. Because when I got stopped out of the pound New Zealand, I was like, damn it. And so I took the pound Swiss off the table. It was like 60 pips or something. It just, you know, it's kind of like take some of the sting off of my pound New Zealand that I took a hit on. So just so you guys know, but I might rebuy that, you know, looking at the Swissy. Oh shoot, why'd I do that? So the Swissy looks pretty weak. Let's figure out, there might actually be some support ahead of that, but see, down here at the 618, I'm a buyer down here. I really am. I am. Remove that. Resistance right now is 96.50. I don't think I want to write that down. Maybe these highs right here, 96.70. It's not great resistance. Somewhere down here, I want to say 95.50 to 95.70 is going to be support, because that's the 161% extension. Okay, we're in a longer term range. Dollar yen. Thank God I'm still short the dollar yen. It's been my saving grace, actually. Now it is bouncing. You know, we basically found some support down here. Big support, in my opinion, especially on a really weak number. Big support is going to be down here, 111.85. You got to watch equities too. You know, you got to watch equities too. Resistance is going to be this previous. See it right here. Previous support, current resistance is going to be right about there. So 112.60, 111. I'm doing this quickly just because we got to really move. 111.85. 112.60 is still bearish. Dollar Canadian. Okay, I'm long the dollar Canadian. I am not happy about it. My stops are they're below the trend lows, just so you guys know. I don't, but I'm not comfortable. If we close the day below 130, I'm gonna have to pull the plug on this. You know, I made some good money. This is another situation. I made good money from this from the last couple of weeks. I got stopped out like right here. I rebought it, and then now I'm giving back what I made the last 2 weeks in the stupid thing, which is really, you know, irritating. By the way, the U.S. dollar Mexican peso closing in on my stops right now, just so you know. So the Canadian should have good support down here at 130. It should be support. But like I said, if we close the day below here, I'm gonna bail. I have to pull the plug on it. Resistance now. Let's see. Resistance will be right here at 130.80. Okay, 130.80 is resistance. It is still in a bearish trend. You know, we've had it in a bearish trend until it gets back above 133. It's in a bearish trend, and I am trading counter trend. Let's do the Kiwi really quick. Kiwi stopped me out overnight. This is a pretty bullish breakout, guys. RBNZ or no RBNZ, you know, as long as we can hold above 69 cents, it's bullish. Okay. Oops. Shoot, that's not resistance. That's going to be support. It's actually, I think it's whatever the highs here are. 68.95. Yeah, it's, I mean, 69 cents. All right, so take the 127% extension. That's new target, comes in at 70.27. And it is turned bullish. The Aussie is still bullish too. Now we'll do that really quick. Let's go here. Aussie. Only problem with the Aussie dollar is the Aussie dollar is challenging some of this resistance here, and we're struggling, right? We're struggling at these highs. We came out of a triangle. Okay. I don't know why my trend line got taken away, but anyway, we're trying to break out here. I'm going to take the overnight highs, which are 70, basically 77 cents. It's still bullish. Okay. Now, support. I mean, obviously, if we turn around, you know, and we break through this support, that's going to be a pretty bearish event for the Aussie today. It will be, because then we'll set up like a double top. But that's not what we're dealing with right now. Right now, we're dealing with a very bullish Aussie. So this comes in at 76.15. Okay. When I get back, we're going to bust a move on the dollar index, peso, Norwegian krona, Swedish krona. So don't go anywhere. I'll be back in a few minutes. We got to do this all before ADP. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. Let's continue on. We got a lot of stuff to do here. Let's go to the dollar index. Whoops. Okay, let's take a look at the dollar. So the dollar obviously got hit really hard yesterday. I mean, this is just like some amazing moves here. Let me remove that. Okay, and you know what? I didn't get a chance to adjust this yesterday. Some are grid lines. Yeah, that's better. Vertical grid lines. Yeah, that looks a little bit better, because this way we can't, you know, it's not so visible here. Okay, obviously the dollar index is getting pretty oversold. Look at the 4-hour chart. We are, you know, probably approaching some pretty key support here. Well, no, we're below the 786, but you know, the support that comes into play is obviously these lows, which will be, and you know what else I need to do? Hold on. Just candles, wicks, black, much better. Okay, much easier to see. All right, so support is going to be 94.50. Okay, 94.60, excuse me, which will be that low right there. 94.57, 94.60, 94.60, and then that's going to be key, actually, support. Let's go over to the hourly. So to take the downside pressure off the the dollar, excuse me, it's going to be right there. So that would be 95.05. Okay. That'll take the downside pressure off of the dollar if we can get back above that. We are still in a range. I know you're like, man, isn't the dollar index, isn't it bearish right now? Well, you know, we're if you look at the bigger range, I mean, it may be bearish the last couple of days, but I mean, we are, you know, just in a range environment. You know, we can still go down further, you know, but we're just going to be trading at the lower end of our range. And if you look at, you know, what we've been doing the last couple of years, you just do this, or last couple of years, I'm sorry, the last you know, uh, you know, last year or so. I mean, we've been in a big range, you know, after a very bullish move. So it's hard to get super bearish the dollar at this point. Now, you know, obviously there's still some downside that could be had, you know, especially if the euro, you know, decides it wants to break out. Okay, the peso. This came really close to my stops just a moment ago. My stops are below this 20. Because when you don't put them right at the lows, you know, you can't put your stops right at the lows. My stops were below the 1720 level, and we came to 1720, really damn close. You see, it's trying to stop out, you know, traders below the lows. Relative strength is divergent, but I might get stopped out of the U.S. dollar Mexican peso. You know, obviously I don't like it right now. This is one of those trades that's taken, you know, my gains that I made, you know, the last couple of days in the euro and the pound, you know, they've evaporated due to the, you know, the Kiwi, the Aussie, this one, and the Canadian, and it pisses me off. It's not a huge position, but it's you know, whittling away at my gains. I'm going to write down 1720 because we're basically there. Okay. Now, the other thing you have to think about here is, and what I'm going to do is I'm going to have to start manually watching this one, because if we close below 1720, that means the stock market is bullish. But if the stock market reverses, the U.S. dollar Mexican peso should eventually turn. That's another thought process. But you can see this trend line, the retest of this trend line didn't hold thanks to Janet Yellen. Resistance today, you know, what will take the downside pressure off of the peso? Well, that's going to be right here at 1740. Okay. A lot of work to get up there. All right. And we're in a range, but we're threatening to turn bearish in the peso. All right. Threatening. Let's go to the Norwegian krona. That's the next one over. Right at support. Okay, right at support here. That's at 830. If the U.S. dollar Norwegian krona breaks it, now you have to also imagine this is going to have something to do with the with crude oil. Okay, you got to obviously watch crude here. 830, right? Yeah, 8.30. Oops, it's key support there. Resistance 838 looks like right here. Okay. This thing's threatening to turn pretty bearish. Okay. It's range environment, but we're threatening to turn bearish. Like I said, the dollar looks extremely vulnerable right now. Extremely vulnerable. Let's go over to the Swedish krona. I'm going to write down 813. and 820. Okay. 8.13 and 820. Okay, guys, we have 5 minutes to ADP. Here's your bias chart. Take a picture of it really quick. Okay.